At the moment, fellow Kenyans, our public wage bill accounts for 52% of revenue. The global average for middle-income countries like ourselves is about 35%. Further, the public wage bill accounts for more than 10% of our gross domestic product, well above the middle-income country average of about 5%. All public and state officers, myself included, number approximately 680,000. Just about 1.5% of the entire Kenyan population. It is important to point out that of the Kenya shillings 1.1 trillion collected in revenue last year, Kenya shillings 568 billion went to pay our wages, meaning that 1.5% of our population consumed 52% of all taxes raised. Our debt, our maintenance, and our essential public services, as well as our development, must be paid for out of the remaining 48%. Fellow Kenyans, if the award were paid to teachers, the Salaries and Remuneration Commission would have no choice and would be forced to harmonize wages across the entire public sector. And based on last year's tax revenue, our wage bill would therefore rise from 52% to 61% of all revenues collected. Fellow Kenyans, the new constitution also set up the Teacher Service Commission as an independent constitutional body to recruit as well as to manage teachers. In the management of teachers and working with the SRC, the Teacher Service Commission has progressively enhanced the terms and conditions of teachers, and they have now been brought up to par with other civil servants. That, fellow Kenyans, is the equity that Kenyans expect under our new constitutional dispensation. Right now, teachers in Kenya, or a teacher in Kenya, is paid the same as other civil servants with similar qualifications and responsibilities. Indeed, a P1 certificate holder enters the service at Job Group G, while with other public servants of similar qualifications. Moreover, a graduate teacher enters public service at Job Group K, the same as engineers and other specialized professionals. No one can reasonably complain that teachers have been left behind.